Welcome to session number 3 of MA1, Management Information. In this particular session, we'll look at the cost units, cost classification, and profit reporting. I would advise that you use this particular video together with the other videos that are on my YouTube channel, that is cost classification and cost behavior. So under this chapter, we cover cost units, cost classifications, cost behavior, functional cost, and profit reporting. So let's start with the cost unit. What's a cost unit? A cost unit is a unit of a product which has cost attached to it. A unit of a product which has got a cost attached to it is a cost unit. Examples of cost units could be a room in a hotel, a patient in a hospital, a desk in a manufacturing company. Those will be examples of cost unit. A table is a cost unit. A car is a cost unit. All those are examples of cost unit. Here we need to also understand the difference between a cost unit and the unit cost. The cost unit is a unit of a product which has a cost attached to it. A unit cost is the value of that unit of a product. It's the value of producing something or providing something. So for example, if we have a desk that costed say $89 or kwacha to make, the $89 or kwacha will be the unit cost, while the desk will be the cost unit. The cost unit is a unit of a product. The unit cost is the value of that unit of a product that is being costed. When we come to cost classifications, cost can be classified in different ways. Cost classification actually is the grouping of cost under common characteristics. The grouping of cost under common characteristics. Cost classification number 1 could be you are classifying costs as either direct costs or indirect costs. Direct costs are those costs that can be traced specifically to a cost unit. Costs that can be traced specifically to a cost unit will be called the direct cost, and the total of the direct costs are called prime cost. So what is prime cost? Is simply the total of the direct costs. Indirect costs are those costs that cannot easily be traced to a particular cost unit or product. Costs that you can't easily trace in the product are called indirect costs. For example, the cost of rent will be an indirect cost. The cost of paying supervisors will be an indirect cost. The examples of the direct cost would be costs like material cost, because you can easily trace material cost in a particular product, or the cost of labor for those workers who are actually making the product. So those will be direct costs. But the cost of paying supervisors, the cost of other overheads, things like rent, will be indirect costs, because those costs cannot be directly traced to the product or the cost unit that is provided. The total of the indirect costs are called overheads. So what are overheads? Is the total of the indirect cost, which are called overheads. When we come to issues of cost behavior, again, I advise that you can make references to the video that is already on my YouTube channel entitled Cost Behavior. Cost behavior refers to the way in which costs are affected by changes in activity levels. How costs are affected by changes in activity levels, or how cost reacts to changes in activity levels. That's cost behavior. The responsiveness of cost to changes in activity levels. Some costs, they do change when you change the output levels. Other costs remain the same. That is, of course, in the short run. Other costs remain the same even when you change the activity level. Activity level refers to the amount of work done or volume of production that is done in a particular period. That's the activity level. So amongst the cost behavior, we have fixed costs, variable cost, step fixed cost, and the semi-variable costs. So what are the fixed costs? Fixed costs, these are costs that remain the same even when you change the activity levels. At least in the short run, these fixed will be constant. For example, the cost of rent may remain the same even when you change your output levels. You produce more, you pay the same amount of rent. You produce less, you still pay the same amount of rent. The step fixed cost, these are costs that are fixed within a certain level of activity but steps up with the increase above these levels of activity. For example, if you are renting a factory that can accommodate 1,000 units, it means that as long as your activity level is below 1,000 units, or as long as you are producing less than 1,000 units, you only rent one warehouse. But the moment you increase your output beyond that 1,000 units, you have to rent the second warehouse. So the rental cost for the warehouse will step up. And that's what we mean by step up fixed cost. A fixed cost that is fixed within a certain level of activity beyond which the cost will definitely step up. A variable cost is a cost that varies directly with the number of units produced. A variable cost could be the costs of material. For example, material costs will vary according to the number of units you produce. If you produce more units, you spend more materials. If you produce less units, you spend less materials. So an example of a variable cost would be the cost of materials. This cost varies directly with the number of units produced. You increase your output, the cost increase. You reduce your output, the cost will reduce. The semi-variable cost or semi-fixed cost, or simply the mixed cost, is a cost that is partly fixed and partly variable. So at the end of the day, you need to separate the variable cost from the fixed cost so that you can know how much variable costs are there and how much fixed costs are there. This is all explained in the cost behavior video, so I encourage you to just look for that video and watch it. Other cost classification, costs can be classified using functions, and so we call these as functional costs. So functional cost examples includes production costs, distribution and selling cost, administration cost, financing cost. All these are classification by function. Now on the profit reporting, we look at the inventory valuation method. Sometimes you can value inventory based on absorption costing, or you can value inventory based on marginal costing. So what is absorption costing? Way of valuing inventory. This is where the cost of the product for inventory valuation is a combination of both the variable production costs plus the fixed production cost. That's why absorption costing is called full costing method, because you are getting both the variable costs and the fixed production cost as part of the cost of inventory, or cost of the value of those units. Under marginal costing, we cost the product for inventory valuation is costed at the variable production cost only. So under marginal costing, you only get the variable production cost as the cost of inventory, or the cost of the products or units in inventory. So the difference between absorption costing and marginal costing is that absorption costing will be full costing method. Inventory will be costed at both variable production cost and fixed production cost. Under marginal costing, you only value that inventory based on the variable production cost. So that simply means that under marginal costing method, you will take the fixed cost as period cost that you subtract at the end. Now, if you're using the marginal costing method, you have to calculate the contribution first and then calculate the profits later. So contribution is calculated as sales minus the variable costs. Sales minus the variable cost. That's how we calculate contribution. So what is contribution? You take the selling contribution per unit will be, you take the selling price minus the variable cost per unit. Total contribution will be, you take the total value of sales minus the variable cost, and the fixed cost will be subtracted, of course, as period costs at the end after contribution has been calculated. Now there is a build up on the profit reporting part. You have to cover the details on absorption costing method and marginal costing method in your MA2. I'll be able to do another video to just back this video up with the profit calculations for absorption costing and marginal costing, but this topic builds up in your MA2 and also your FMA. The next chapter that we'll look at is the chapter 4, management responsibility and performance reporting. It's also an easy chapter that we can look at, so be on the lookout for this session number 4 that we're going to do soon. Thank you for your time.